All right, so after a week of some pretty wild swings, the biggest question on everyone's mind is, what's next? Well, today we are going to cut right through all that noise and give you a clear, actionable game plan for the year ahead. After a week that felt like a total roller coaster, the final verdict from Wall Street strategists is in. And honestly, it's kind of a head scratcher. The phrase we kept seeing over and over was cautiously optimistic. It just makes you wonder, seriously, what does cautiously optimistic actually mean when it comes to your money? Let's break this thing down and figure out how this feeling on the street should actually shape your strategy as we get ready to close out the year. Okay, first up, let's look at the final scorecard for the week. And yeah, at first glance, the numbers look kind of sleepy, pretty flat. But if you dig just a little deeper, you start to see this fascinating story emerge, a real tale of two markets. So you can see the S&P 500, it barely moved at all. But that's not the real story here. The real story is the split. You've got tech stocks that just surged, pushing the Nasdaq up, while at the same time the industrial-heavy Dow Jones actually took a bit of a hit. And look at this chart. The divide is just so clear. The tech-heavy Nasdaq is up here, flying high, while the Dow is stuck down in the red. This growing gap between tech and the rest of the economy, that's a huge theme we're going to be keeping an eye on.
So what was the engine behind this tech rally? Come on, you probably guessed it. Artificial intelligence. Yep. After a little bit of a quiet spell, the AI hype train is officially back on the tracks, and it is going full steam ahead.
It was just a flurry of good news that sent these AI stocks soaring. You had Oracle's huge deal with TikTok's parent company, news about Nvidia potentially getting back into China, and then all this buzz around CoreWeave and OpenAI funding. It all just added fuel to the fire. But, while that whole AI party was in full swing, the rest of the market, it was singing a very different tune. Let's zoom out and look at the broader economic picture, because that's where you'll see why not everyone was celebrating this week. So here's the catch. Yeah, inflation is cooling off a little, but the Fed is still playing hard to get with interest rates. The market is now basically preparing for this higher for longer environment, with maybe only one single rate cut expected in all of 2026. And that is putting a real squeeze on other parts of the economy. And you can really see that pressure in the retail sector. As the man himself, Jim Cramer, put it so perfectly this week, retail was pretty awful, except for Walmart. Honestly, that one quote just says it all, doesn't it? So what's Walmart's secret sauce? How are they pulling this off? Well, while other retailers are really struggling, Walmart is just crushing it. And it's because they have this laser focus on value. They're using AI in really smart ways, and they've totally nailed the whole online and in-store experience. Okay, so we've picked apart the week that was. But let's be real, as smart, long-term investors, we need to look past all the daily noise and focus on the big picture. So what are the major structural shifts that are going to shape the market in 2026? From everything we're seeing, it really boils down to three potentially game-changing trends for 2026. First, what we're calling AI 2.0. Then there's the big shift to hybrid vehicles. And finally, a changing of the guard, with new leadership at some of the biggest companies in the world. So the big question is, how do you actually play this? How do you navigate this complex market? Don't worry, we've got you covered. We've put together a simple, actionable game plan to get you through the end of the year. All right, here it is, your year-end checklist. We're going to break it down into what to do, and maybe more importantly, what not to do to really set yourself up for a successful 2026. Okay, first, the do's. Number 1, have the courage to just do nothing. Avoid those emotional trades. 2, take a really hard look at your portfolio. Are you maybe a little too heavy in AI? 3, start planning your 2026 strategy now. And finally, update that watch list. Get ready to pounce on some new opportunities. And now for the don'ts, which are just as critical. Look, don't get sucked into chasing stocks just because they're hot at the end of the year. Don't bet the farm on some mythical Santa Claus rally. Please don't double down again on AI. And most importantly, do not let the daily news cycle dictate your long-term plan. So here's the final takeaway. 2025 has been a really strong year for investors, no doubt. But the real test is what comes next. As we head into 2026, the key is going to be discipline and preparing for a market where diversifying beyond AI is going to be absolutely critical. So the real question is, are you ready to look past the hype and find that next big win?